G Shipping is one stock that has reported a soft quarter this time. Actually, the business environment for the company has been on the weaker side. Their revenues declined, margins contracted. G Shivakumar, who is the Executive Director and Chief Financial Officer at G Shipping, joins us now to talk more about that. Mr. Shivakumar, good morning. It was almost a 15%, over 15% decline that you saw in your top line. Just trying to understand, what is the outlook for the second half? Are you expecting to see any recovery, and what was the major reason for the decline this time around?
Good morning, Sonia. Thank you for having me.
Morning.
Yes, we had a weaker quarter than Q2 of last year. This year's relative weakness is to do with seasonality. The tanker markets, typically Q1 and Q2, which are the summer months, tend to be weaker than the winter months. Last year, we did not see that seasonality, and that's why we had a very good Q1 and Q2 last year. And that's why we are down from the previous year. As it stands today, the markets, crude tanker markets are stronger than they were last quarter. Product tanker markets, not so much. So that's where we are. So typically, we would expect strength to come in over the winter months for the tanker market, which is a majority of our fleet. So while the results were worse than last year, it's more to do with last year being an unusually strong Q2 for the tanker markets.
Okay, all right. Hi, good morning, Mr. Shivakumar. You know, the NAVs have gone up, clocked more than 1,000 rupees after a very long while. But the order book to fleet ratio, well, that's still relatively lower. I wanted your sense. Are we in a super cycle?
Yeah, I don't like using that word. But
I mean, just going by the data points, you know, I'm just looking at that ratio, and we briefly spoke about it the last time as well.
Yeah. So, yes, the fundamentals are lining up very well. The order book is very low in the historical context. Asset prices are pretty high, and this is the first time actually that we've crossed 1,000 rupees per share in NAV, standalone NAV. So asset prices are very high and order books are very low, and therefore, and leave aside the asset prices, order books being very low is pretty good for the outlook for the markets, at least from the supply side. Now, what happens to the demand side is really difficult to assess. There are a lot of pressures building up on economies, on consumption of commodities. We'll have to see how that plays out, but we know that one side of the equation at least is in our favor.
Okay. Mr. Shivakumar, hi, good morning. Two questions. One, what's the outlook for dry bulk? That is one. And second, as you said, I mean, there are pressures, economy-wise speaking. There is this situation in the Middle East, etc. as well. Have you seen any ripples because of that on the crude or the product side at all, or not really?
Yeah. So first on dry bulk, morning, Prashant. The dry bulk is mainly a China play. Chinese steel consumption has been pretty weak, but on the other hand, they've been producing and exporting. Iron ore imports have gone up quite a bit this year. Coal imports have gone up a lot during this year, but that was mainly to do with their hydropower issues. It's tough to call. In last couple of days, we've seen some murmurings again about a stimulus and how they're going to increase their deficit and do some stimulus package, some kind of stimulus package. So let's see how that plays out. That will be a significant factor for the markets. We also have some supply side issues, which is to do with congestion at the Panama Canal, to do with congestion at the load ports in Brazil. So all of those things on the margin are helping to keep the market reasonably firm. On the tanker markets, there's nothing that we can put as causation for markets, and markets have gone up quite a bit. Crude tanker markets have gone up quite a bit in the last 2 weeks. We don't know why. It could be a little bit of nervousness around this Middle East situation and people trying to stock up, but rates have gone up quite a bit for crude tankers in the last 2 weeks.
How much, sir?
While it's tough to put, so what used to be, say, for a Suezmax crude tanker, $35,000 a day, is probably $55,000 a day in the spot market now.
Okay,
So
we'll let you go on
that's
that
one.
note. Sure. Sure. Thanks a lot for joining in. Sorry, we've actually run out of time, not out of questions, but we'll definitely touch base with you again. We'll